So, here are 5 boring essential money moves. Number 1 in our most boring essential money moves. Control your income story. Lenders look at how much you make. It's a fact. They look at how consistent it is. And then you find a little motivation because you've been watching my videos and you've subscribed to my channel. Thank you. It's like a light bulb in your head. One of your aha moments. Aha! I can make this income story of mine a little spicier. You've thought about approaching your favorite neighbor or renting next door, and you explain to him or her about your goal of home ownership. You're tired of renting, you say. You want to own, and you explain to them, I'm subscribed to this channel, head of household, and Catherine talks about income stacking to qualify for a mortgage.
The overall picture is that you have to have a stable job history, predictable pay, W-2, or well-documented self-employment. Fewer gaps on your resume or sudden changes. I had a hard time with this myself. Here's an income story. You're chasing money, but you still find yourself coming up short for a mortgage loan pre-approval. Your mortgage lender suggested that you need a co-borrower. Darn, what is a co-borrower? So to make this income story a little less boring, you take it up a notch. You approach your parents. If that doesn't work, your best friends. Hopefully you have one. If that doesn't work, you try grandma, grandpa. Talk to them about you and them buying a house together. If that fails, you try your aunts and your uncles, first cousins, second cousins, third cousins. You go through your whole family tree to find that one co-borrower that understands your goal of home ownership. If this makes you feel better, I'll say it, you're not alone. From the U.S. Census type data, 50% of adults earn below $40,000 to $45,000. 54% earn below $50,000, and 81% earn below $100,000. And this is important to mention. Only about 19% of people earn above $100,000. And only a small fraction earn very high incomes. So that is why I highly advocate for some creativity. Control your income story. Be creative. Jumpstart a nice co-borrower relationship now, especially if your income is in the 50 percentile range. Sign up. I've added a link below. Number 2 in our most boring essential money moves. I can't sleep through this because it's so boring. Number 2 in our most boring essential money moves is clean up your credit profile. This is one of the biggest approval drivers. How do you do that? First, you must take courage to order your credit report from annualcreditreport.com. Let's focus on paying on time, every time, lowering credit card balances, avoiding unnecessary new accounts. You don't need perfect credit. Well, you do. Fannie Mae and Freddie Mac considers a credit score of 620 and up a good credit. But there's more behavior analysis that goes into the approval. The most important thing to develop in your routine, you need predictable, responsible behavior. Number 3 in our most boring essential money moves. Lower your debt pressure. Your debt-to-income ratio quietly determines a lot. Start by and please make note of these things and take action if you can. Even small baby steps can be a good motivator. Paying down high balances credit card or moving it to zero interest offers. Avoid new monthly obligations if at all possible. Do not take on big purchases for now. Number 4 in our most boring essential money moves. Build documented stability. What does this mean? This is the most boring part most people skip, and it costs them approvals. Think consistent bank balances. As a word of advice, do not hide your cash. Not stash it under the mattress or transfer from one bank account to another bank. We need your money documented in one place or account. If you can pause this video and make a note of what I just said, please do. Your saving habits matter and organized financial records. Remember this, if it cannot be documented, it doesn't count. If you're self-employed, then still we need a clean document that proves you have the down payment saved up and cash reserves. Maybe you have inherited artwork, and if it's worth $1 million, then we need proof that it's under your name. That is what we call documented stability. I think that's a great example. Number 5 in our most boring essential money moves is position yourself before you apply. Most people apply too early and get denied. Instead, call me first, and together we will set up a time to review your full financial picture first. Fix weak areas in advance and give yourself a timeline to improve. Ta-da! If this is starting to hit home, don't just second-guess your way through it. Join a support group. There is something called From Zero to Ready at koborrowerhub.com. I've included a link in the description box below. Check them out. These are our 5 boring money moves. The reason why I'm creating these videos is to serve as a reminder. The whole picture of your earnings and what you owe monthly and expenses is what matters, so keep that in check. If you need a guide on how to make this whole American dream of homeownership happen to you, then we have to start now. Give me a call. I do pick up the phone after you leave a message, but please introduce yourself because I don't return call or text messages without a legit message inquiry. I promise I'll call you back if you're in the United States. Take a few minutes and talk it out with your favorite mortgage loan originator. If you like me, hope you do, well then I'm just a phone call or email away. Think of it like a quick financial checkup. No pressure, no commitment, just clarity on where you stand and what to do next. Please click the link in the description below to get started. I hope you enjoy our 5 boring essential money moves. Like and subscribe, give us a thumbs up, and share to your social media feed. See you in our next video.